So I'm currently logged on to a browser, and you can see here at the top right hand corner we've got a lot of different companies set up in this very specific setup. So you can do different branches that roll up into companies. You could also do group companies. There's no limit on how many companies you can do, and every individual company can be its own ABN that deals with its own BAS or do group BAS. And over and above that, if they're all related, that's how you would set that up. But you can also have here multiple tenants where you can have different companies set up that is completely unique from each other. If, let's say, they don't share the same accounts, chart of account structure, things like that. So essential or ownership. In saying that, in terms of processing intercompany journals and not looking at the consolidations per se, you first need to set up inside of MYOB Advanced some mapping. So when I look at my inter-account mapping here, just for this specific company I'm on, you'll see that you'll specify that if I were to process any transaction to any of these other companies inside of this company, then I need to write to an offsetting account, and you can define that loan and or offsetting account the way you need to. So once this has been set up, you also set up the destination branch. So if anything was to be posted inside of there, to do the offsetting again. So when you've got the originating and the destination set up and you've created these mappings, we can then go ahead and essentially create journals. So what I will do here is just show you a very quick example. I'm not an accountant, so my journals typically don't make sense, but it's just to give you an idea of how this works. Worth explaining as well that you can see here that I'm currently logged into the main branch, but I can from here just write a journal to another company as well. So every company typically will have its own journals written into its own books, and I can do that without having leaving the screen. If I wanted to do a cross-leg journal or a journal where I would essentially allocate a part of the cost to another company, that's kind of what I will be showing you in this example. So what I will do here is just go and create a line, and you can see here that I'm still in the main branch. So this leg of my journal is still in this ledger, and I will just pick up, let's say as an example, my just check account, and I will be say crediting that $200. I'm not going to be talking about the sub account structure in this specific demo, but the sub account structure is our dimensions, profit and or cost centers, and they run across P&L and balance sheet accounts. So let's say the second line, I actually want to specify that there's some expense going into those books for that company, which is a separate company to the one I'm in now at the moment. And I'll pick up telephone expenses from my chart, and I'll allocate the 200 over there. So when I process this journal, you'll see that automatically the system will go and find two offsetting accounts in each of the books and adds that to the ledger. So in this specific journal, I've now got within the main a credit there on the check, but if got in my interbranch offsetting account sits that 200. And likewise in the Perth company, it's actually created the balancing entry there. So that it does automatically on journals, also does that on AP invoices and similar things like that. So it's a great feature in terms of dealing with some intercompany transactions. Over and above that, we've also got allocations. So an allocation is where we say if you post something to a certain set of books, then at some point, maybe once a month, go and find all those transactions and split the costs for me. Now, the way that it works is you can set this up by percentage or as a statistical ledger. It could be head count, things like that. In this example, I'm looking at a telephone split that I literally just split by my different cost centers or sub accounts, and not necessarily across multiple companies, although that is possible. So what I'm doing is I'm saying any transaction processed in this company to that GL account, pick it up, take 100% of it, and split it like this. So in this case, I'm splitting it in three ways, 20% to that cost center, 40 there and 40 there. I can obviously create multiple other companies next to this as well, and the system will then trigger the offsetting journals as well. And that is a quick overview of how that works. In another video, we'll cover off the consolidation reporting. And yeah, thanks for watching.